So auditors are also compelled to disclose all the transactions with the related parties. Bank requires you to give a declaration. Are you related to any of the bank officers or directors? Hello friends, today I am going to discuss about some old tactics or tools used by the MSME people. We give salaries to our children, commission to our relatives. They are not actually participating in our business, but it is normally used and very popularly used tactics. Rent or giving some subcontracts to a related party. So that way people used to save their taxes by inflating the expenses. So let us discuss how far it is still effective or it has lost the edge. I don't know since how long these tactics were being used. There are various laws which compel the auditors, which compel the promoters, the businessmen to disclose so many things. And these disclosures are studied by the stakeholders like company, registrars, shareholders, bankers, revenue authorities. So one of the disclosure is payments made or transactions with the related parties. So auditors are also compelled to disclose all the transactions with the related parties. Related party means the person, in the case of proprietary concern, his relatives or the companies or partnerships where his relatives are partners or directors or even trustees. These are mandatory disclosures and auditor has to disclose in his report. Secondly, in income tax there is a specific provision that in case the income tax assessing officer feels any transaction with the related party is unreasonable or excessive with the market trend, he can disallow the expenses which he feels to be unreasonable or excessive. So what is unreasonable and excessive is a subject matter of his own conviction. If he feels 5 lakhs rupees salary given to wife who is not participating in the day-to-day business, 5 lakhs means comes to 40,000 rupees, is unreasonable and excessive, he will straightway disallow. These disallowances provisions are overriding provisions. So if he doesn't disallow, then it is automatically allowed. Therefore, this is a very strict provision. And in case of tax auditors, 44 AB cases, then auditor has to disclose the transactions. Then the assessing officer will take his own call whether it is excessive or unreasonable. So from the point of view of income tax, these tactics of paying commission and salaries, rent, expenses, subcontractors to the related parties have, in my opinion, have lost their edge. So transparency has increased a lot. Data sharing and verification, cross verification is becoming very easy for the government officers, to revenue officers, even to the auditors. So auditor, if he doesn't disclose it, then he can be held guilty of not doing his work properly, professionally. The income tax officer, they are also subject to audits. Their auditors can charge them of negligence of not verifying. Banks also see the transactions which are with the related parties. They are knocked off. So if you are selling say 20% of your sales to related parties, sister concerns, associated concerns, bank will not consider those as your actual sales. They will discard that. They will not consider it for your calculating its eligibility for loan. So I think this provision has eroded the advantage have gone. So better not to indulge in such tactics. Then come to the point of Companies Act. Companies Act also requires the auditors and directors to disclose all the transactions with related parties. These related party transactions may be of income, expenditure, or financial transactions like giving loan or accepting deposits, accepting loans from related parties. Even in banks, if you notice it, in the first page of the application form only, bank requires you to give a declaration. Are you related to any of the bank officers or directors? Generally, we don't give so much importance to this question, but banks also have the procedure in place to identify the related party transactions. In the case of banks, if you are related to any staff member or officers of certain cadre and above or directors, then the bank manager accepting your loan proposal does not have any jurisdiction to process and sanction loan to you. Therefore, this is a very important question. The transactions with related parties are very important to be disclosed. In case of companies law, the auditors have to disclose and directors have to disclose in their directors report the transactions made with the related parties. So, any stakeholder, including your employees, the reports are available now online. Inspection within in 100 rupees, anybody can download your director's report, and he can go through. He can come to any conclusion. So not necessarily it will be against you, but it can see what must be the intention of giving salary or commission or to related party. Anybody can be suspicious about it. The confidence level with you will may be damaged or maybe disturbed if you are having a lot of related party transactions. To conclude everything, I think the related party transactions and this tactics of maybe siphoning the money or maybe siphoning the profits, now it is better that one should avoid it, and lot of such things are updated every budget, so you have to be very cautious. Keep on reading the amendments, keep on reading the visiting the websites of taxation and statutory laws, update your knowledge so that even ignorantly or inadvertently you don't commit such mistakes.